Next, we are looking at employee benefit expenses. Means all expenses which benefit the employee, like salary, wages, bonus, staff welfare expenses, canteen expenses, leave encashment. So all these expenses are taken to the profit and loss account debit side, and usually all these expenses are paid to the employees. So under employee benefit expenses, these are a few of the examples. Next, we take the financial expenses, that is expenses incurred to raise your finances. So the examples are interest on borrowings or loans taken from the banks and other financial institutions, interest paid on debenture. Debenture is nothing but loan taken from the public. Then any expense paid for processing of your loans, that is loan processing fees. And next we have any discounts that are issued, that is given on the issue of debentures, and any premium on redemption of debentures. This discount on issue of debentures, the redemption on premium on redemption of debentures, both this concept will be learning in detail in a chapter called issue and redemption of debentures. For time being, the financial expenses include all the expenses paid in raising the finances required by the company, like interest on borrowings, loan taken from banks and other financial institutions, interest paid on debentures, that is loan taken from the public, any loan processing fees, discount on issue of debentures, and premium on redemption of debentures. So when we go to the main pro forma, we take this consolidated total against financial expenses, referring to note number 6. In other expenses, we take all other expenses like administrative expenses, selling expenses, distribution expenses. Administrative expenses, examples: printing, stationery, postage, telegram, audit fees, legal fees, etc. Selling expenses like advertisement, salesman salary, salesman commission, etc. Distribution expenses like godown rent, godown insurance, packing material, carriage outwards, that is carriage on sales, etc. So these are the various other expenses which we take into this. We take all the individual amounts, take the total, and this consolidated total is taken to the main pro forma. And these are the various examples of other expenses. And finally, we take depreciation. Depreciation is given on fixed assets. So fixed assets are classified into two types: tangible asset and intangible asset. So on tangible asset, the reduction in the value of an asset, we call it as depreciation. On intangible asset, the reduction in the value of an asset is called as amortization. So we have depreciation, that is depreciation on tangible assets, like depreciation on plant, depreciation on machinery, depreciation on furniture, etc. And amortization of intangible assets, that is the examples are goodwill written off, patents written off, etc. So we have understood revenue from operations. So this is the main pro forma where we try to find the profit. So revenue from operations include what? Sales minus sales return. Other income, we have seen the examples: interest received, dividend received, profit on sale of asset, etc. So those consolidated totals will come here. So this revenue from operations, we write it as note number 1 and take the consolidated total here. Other income, we write it as note number 2 and we take the consolidated total here. Like that we take the total revenue. So cost of material consumed, we said, is opening stock of raw material plus purchase of raw material minus closing stock of raw material. Purchase of stock in trade, this is for a trading concern. It includes purchase of finished goods minus purchase returns, if any. Change in inventory, we told inventory is of three types. That is stock of raw material, stock of work in progress, stock of finished goods. Since stock of opening and closing stock of raw material have already been considered here we consider opening and closing stock of finished goods and opening and closing stock of work in progress. So employee benefit expenses, all expenses which are paid to the employees, like salary, wages, bonus, leave encashment, employee benefit expenses, etc. Financial expenses, all expenses that are required to raise the finances for running your business, like interest on borrowing, interest on bank loans, interest on loan from other financial institutions, then interest on debentures, that is loan taken from the public, and we have discount on issue of debentures, loan processing fee, etc. In other expenses, we have the all other expenses which have not been considered above, like printing, stationery, postage, telegram, selling expenses like advertisement, salesman salary, salesman commission, distribution expenses like go down rent, go down insurance, packing material, carriage outward, etc. Depreciation is on fixed assets, both tangible and intangible asset. On tangible assets, we call it as depreciation, and intangible asset, we call it as amortization of written off. So we give the respective note numbers here, and whatever the consolidated total we have got there, we take it here. And then finally, we try to arrive at profit before tax minus tax will give what? Profit after tax. So it's so simple. Income minus expenditure gives profit before tax, minus tax gives profit after tax. Now we have understood completely what are the financial statement. We understood earlier what was a balance sheet. Today we have understood the pro forma of profit and loss account, the various transactions, and the respective examples. So having understood that, now what is the need for preparing these financial statements, or what are the objectives of financial statement? In brief, I would like to explain. The primary objective is to assess the users in decision making. The other objectives include to present a true and fair view of the business, to judge the effectiveness of the management, to disclose the accounting policies, to provide information about the earning capacity of the business. So essentially, your financial statements are like progress report, and once you look at the progress report, it enables the management and the various users to make decisions for the company. What is that? We'll be seeing a little later. And other objectives, once the financial statements, they present the true and fair view of all the activities that are being undertaken by the business. The financial statements will also enable you to judge how effective is the business. Like if the business is making profit, then how effective is the management? If the business is making the profit, then you know that the management is effective. And by looking at the balance sheet, you can know that how is the management, how it is optimizing the utilization of various resources. And the financial statements also disclose the various accounting policies that are adopted by the firm. The financial statements, they provide information with regard to the earning capacity of the business, that is in terms of profit that is earned by the business. And like that, there are a couple of other activity objectives, and I would like you to go through your material and try to figure out a few more objectives. And now finally we come to who are the users of this financial statement. So we have taken an effort to prepare all these financial statements like the balance sheet and statement of profit and loss account. Now, who are the people who are exactly going to use the data that is stored in the financial statement? The users can be classified as internal users and external users. Internal users are the people who are within the organization. External users are those people who are outside the business organization. So internal users, like the people within the organization, that is the owners of the company, the management which drives the company, and the employees who work for the company. So why are the shareholders or the owners interested in financial statement? To assess their profitability. Why is the management interested in the data stored in the financial statement? Because it enables them to make decision making, like cost cutting, or increasing your target production targets, or increasing your profit margins, or going for a new line of business, or closing down an existing line of business because it is not viable, etc. Why are the employees interested in the financial statements? That is, they're interested because with regard to the bonus which they earn on the profit made by the company, and the incentives with regard to the remunerations. The external users like creditors. Creditors are the people who want to give loans for the company, and these people look at the financial statement to understand the credit worthiness of the company, whether the company will be able to repay the loans that the creditors grant to them. Then the investors are the people who want to invest in the company. So the investors are interested to look at the financial statement to look at what is the earning capacity of the company. When the investors are putting their money into the business, they're looking at what are the returns they're going to earn on their investment. So they look at the earning capacity of the company. That is nothing but the profitability of the company. Like government, why is the government interested in the financial statement of the company? In order to determine the tax liability of the company, and also to frame the economic policies for the economy as a whole. So these are a few uses of your financial statements. With this, we conclude this chapter called Financial Statement of Companies.